The richest people on earth are selling everything. And I mean everything. Jeff Bezos, 13 billion in Amazon stock. Gone. Mark Zuckerberg, 40 billion in Meta shares. Sold. Jamie Dimon, CEO of JP Morgan for 19 years, just sold stock for the first time ever. This isn't about taxes. This isn't diversification. This is an exodus. And here's what should terrify you. They did the exact same thing in 2007, right before everything collapsed. The crash is coming, and the billionaires are screaming it with their actions. The only question is whether you're listening. Let me show you how extreme this is, because most people have no idea. Insider selling hit $464 billion in 2024. That's the second highest year in recorded history. The highest? 2007, at $650 billion. We all know what happened in 2008. But here's what makes right now even more dangerous: the ratio. In a normal market, insiders sell about $3 for every $1 they buy. That's healthy. People cash out, pay taxes, diversify. Normal business. In 2024, that ratio hit 9 to 1. $9 sold for every dollar bought. Some months spiked to 12 to 1. This isn't routine. This is controlled panic. And it's not random executives at struggling companies. These are the most successful investors and operators of our generation, and they're all selling at the exact same time. Jamie Dimon. This is the signal that should make your blood run cold. Dimon has been CEO of JP Morgan Chase since 2005, 20 years. He's preached about long-term holding. He's been compensated in stocks specifically to align his interests with yours as a shareholder. In all that time, he never sold a single share. Not one. Until 2024. He sold 1 million shares, roughly $150 million, and claimed it was for estate planning. Estate planning? He's 68 years old. He could have done estate planning any time in the last 15 years. But he chose now, when markets are at all-time highs. When, as CEO of America's largest bank, he has access to data about the real economy that nobody else sees. He sees loan defaults rising, commercial real estate collapsing, consumer credit maxing out. And for the first time in 20 years, he's selling. Jeff Bezos, $13 billion in Amazon stock throughout 2024. The man who built Amazon from a garage to a $3 trillion empire. He knows Amazon better than anyone alive. The excuse? He moved from Washington to Florida to save on state taxes. But Bezos has been a billionaire for 25 years. He could have moved to Florida anytime and saved on taxes. Why now? Because Amazon is at all-time highs. The market is at all-time highs, and Bezos sees what's coming. Mark Zuckerberg sold $40 to $50 billion in Meta stock in 2024, his largest sales ever. The official reason? Funding his philanthropy initiative. But here's the thing, he could fund philanthropy any year. He chose to dump billions in 2024 when Meta stock hit $500 per share. Record highs. That's not philanthropy. That's market timing. Larry Ellison sold $3 billion in Oracle stock. He's worth $150 billion. He doesn't need the money. The Walton family sold over $2 billion in Walmart stock. The family has held Walmart as their core asset for 60 years. Now they're cashing out. Nvidia insiders. This might be the most insane example. Nvidia stock went from $120 in January 2023 to over $450 by late 2024. Nearly 4 times higher in 2 years. The AI boom. Nvidia makes the chips that power AI. Demand is exploding. Revenues are skyrocketing. And what are Nvidia executives doing? Selling. Over $700 million in 2024 alone. The company is growing faster than ever, and the insiders are dumping. Why? Because they know the AI bubble will pop. They know current valuations assume decades of perfect growth. And they know that's impossible. So they're selling at the peak while everyone else is buying. You need to understand something. These men have information you'll never see until it's too late. Jeff Bezos knows Amazon's real sales trends, not the polished quarterly reports, the raw internal data. He sees if growth is slowing, if margins are compressing, if competition is intensifying. Mark Zuckerberg sees Meta's real user engagement numbers, real ad pricing trends, the actual cost of AI development. Jamie Dimon sees JP Morgan's real loan default rates, real credit quality deterioration, real problems in commercial real estate. They're seeing data you won't see until quarterly earnings 3 months from now. And by then, it's too late. But you don't need their internal dashboards to see what they're seeing. The public data is screaming the same warnings. The Buffett indicator, Warren Buffett calls this the single best measure of whether stocks are cheap or expensive. It compares the total value of all stocks to the size of the economy. Below 80%, stocks are cheap. 80 to 120%, fair value. Above 150%, bubble territory. Right now, 185%. The highest in history except for a brief COVID spike. This means stocks are valued at nearly double what the economy actually produces. That's mathematically insane. For this to make sense, you'd have to believe the economy will grow 50% while stock prices stay flat, or that profit margins will double overnight. Neither is happening, and the billionaires know it. The Shiller PE ratio, this measures stock prices against 10 years of average earnings. The historical average is 16. Right now it's 34. That's the third highest reading in history. Only the dot-com bubble in 2000 and the COVID spike were higher. Both were followed by crashes. Investors are paying $34 for every $1 of earnings. Double the historical norm. Margin debt. This is money people borrow to buy stocks. It hit $950 billion in late 2024, near all-time records. Here's why this matters. Leverage works both ways. If stocks rise 10% and you're leveraged 2 to 1, you make 20%. Great. But if stocks fall 10%, you lose 20%. And if they fall enough, you get margin calls, forced to sell immediately. This creates cascading panic selling that accelerates crashes. In 2007, margin debt was at record highs. In 2008, as stocks fell, margin calls forced $400 billion in selling. That helped crash the market 57%. We're at the same levels right now. The billionaires know when the market turns, this leverage will amplify the fall. Commercial real estate. Office buildings across America sit 40 to 50% vacant. Remote work is permanent. Buildings that were bought with 3% mortgages are now worth 40% less. And those mortgages are coming due. Over $2 trillion in commercial mortgages mature through 2025 and 2026. When owners try to refinance at 8% interest rates, the numbers don't work. They default. Regional banks, with 20 to 30% of their loans in commercial real estate, will take massive losses. Some will fail. We saw previews of this in 2023. Silicon Valley Bank, First Republic, Signature Bank. All collapsed. Now the real wave is coming. Jamie Dimon sees this perfectly. He runs the largest bank in America. He knows exactly which banks are exposed, which loans will default. And he's selling. This pattern has played out before. And it's playing out exactly the same way right now. In 2007, insider selling hit $650 billion, the highest on record at the time. The sell-to-buy ratio spiked to 8 to 1, 9 to 1. And the specific people selling were the CEOs of the companies that would collapse. Angelo Mazzillo, CEO of Countrywide Financial, the largest mortgage lender in America, sold over $140 million in stock in 2006 and 2007 at $140 per share. Why? Because he knew the mortgages his company was creating were garbage. Subprime loans to people who couldn't afford them. Loans designed to default the moment housing prices stopped rising. He knew the crash was coming, so he sold. By 2008, Countrywide was bankrupt. The stock went to $4. Mazzillo got out at $140. Richard Fuld, CEO of Lehman Brothers, sold over $250 million from 2005 to 2007. Lehman Brothers filed for bankruptcy in September 2008. The stock went to zero. Fuld's sales at $40 to $80 per share saved him $250 million that would have evaporated. Stan O'Neill, CEO of Merrill Lynch, sold over $70 million in 2006 and 2007. Merrill Lynch collapsed in 2008. Had to be sold to Bank of America to avoid bankruptcy. O'Neill got out at the top. The pattern was obvious. The CEOs of the banks and mortgage companies that would implode in 2008 systematically sold stock at the peak. They knew the housing bubble was unsustainable. They knew their companies were loaded with toxic assets. They knew the crash was coming. And they sold 12 months before it all fell apart. 2024 and 2025 are following the exact same timeline. The difference? This time the bubble isn't just housing. It's everything. Stocks, real estate, corporate debt. The entire financial system is overvalued and overleveraged. And the insiders are executing the 2007 playbook perfectly. Sell at all-time highs. Get to cash. Wait for the crash. Buy everything back at 50% off. We have historical precedent for what comes next. Stage 1. The selling. That's happening right now. January 2024 through early 2025. Record insider sales. Stage 2. The crash. Based on history, the crash typically follows heavy insider selling by 12 to 18 months. Insiders sold heavily in early 2007. The crash began in October 2007, 12 months later. If 2024 was the heavy selling year, the crash likely begins late 2025 or early 2026. The trigger could be anything. A major bank failure, commercial real estate defaults cascading, a tech stock implosion, a geopolitical crisis. The trigger doesn't matter. The system is fragile, overvalued, over-leveraged. Any shock starts the cascade. And once it starts, forced liquidation amplifies everything. Margin calls, algorithmic selling, panic. The market could fall 30 to 50% in months, maybe more. Stage 3, maximum fear. This is when unemployment spikes. Banks fail. Corporate defaults surge. The media runs 24/7 economic collapse coverage. Regular people will be terrified and selling everything. This is the bottom. And this is when the insiders who sold at the top in 2024 will deploy their cash. They'll buy stocks at 50% discounts. Real estate being foreclosed. Businesses being liquidated. And they'll make fortunes on the recovery over the next decade. This is the pattern. It's played out before. And it's playing out right now. You're not a billionaire with perfect information, but you can recognize the pattern and position yourself accordingly. First, understand you can't time the exact top or bottom. Bezos might be selling too early. Stocks could rise another 20% before crashing. Or the crash could start tomorrow. You don't know, but you can see the direction. Valuations are extreme. Insiders are selling at record levels. The macro setup is terrible. The crash is coming. Maybe 6 months. Maybe 18 months. But it's coming. Second, reduce your equity exposure if you're heavily invested. If you're 70% stocks right now, consider reducing to 40 to 50%. Raise cash. Yes, you might miss some gains if markets keep climbing irrationally, but you'll preserve capital when the crash comes. And that capital becomes buying power at the bottom. This is exactly what the billionaires are doing. They're reducing risk. You should too. Third, hold gold as wealth preservation. When the crash comes, the Federal Reserve will print unlimited money to bail out the system. Just like 2008. Just like 2020. That money printing devalues the dollar. Gold preserves purchasing power. Put 5 to 10% of your portfolio in physical gold or gold ETFs. Fourth, consider protective puts. Put options on SPY or QQQ. The right to sell at predetermined prices. If you buy puts with strike prices 10 to 20% below current levels, expiring in 6 to 12 months, you pay a small premium. If the market crashes, those puts explode in value and offset your stock losses. If the market doesn't crash, you lose the premium. But it's insurance. You pay for protection. Fifth, have a buy list ready. When the crash comes, when the S&P is down 40 to 50%, when everyone is terrified, you need to know what you're buying. Make a list now of quality companies you want to own. Companies with strong balance sheets, low debt, recession-proof products. Apple, Microsoft, Visa, Johnson & Johnson, Costco. When these companies are on sale at half price, you buy aggressively with the cash you preserved. This is how wealth is created during crashes. Not by panic selling at the bottom, but by buying quality at discount prices. Sixth, don't try to be a hero. Don't short the market unless you're extremely sophisticated. Timing shorts is brutally difficult. The market can stay irrational longer than you can stay solvent. The billionaires aren't shorting. They're selling and raising cash. You should do the same. Sell. Raise cash. Preserve capital. Wait for the bottom. Then buy. Simple. Effective. Proven. Here's the bottom line. The billionaire exodus is real. $13 billion from Bezos. $40 billion from Zuckerberg. First ever sale from Dimon. $3 billion from Ellison. Billions from the Waltons. $700 million from Nvidia insiders. $464 billion in total insider selling in 2024, the second highest year on record. The sell-to-buy ratio at 9 to 1, the most extreme in history. This isn't diversification. This isn't tax planning. This is the smart money getting out before the crash. They see the Buffett indicator at 185%, the Shiller PE at 34, margin debt at records, corporate debt that can't be refinanced, commercial real estate collapsing, regional banks failing, federal debt spiraling. They see recession coming, and they're selling. The pattern from 2007 is repeating exactly. Heavy insiders selling 12 to 18 months before the crash. We're in that window right now. The crash is coming, late 2025 or 2026, maybe sooner, but it's coming. The billionaires are telling you this with their actions. They're screaming it. The only question is whether you're listening. Subscribe to this channel because over the next 12 to 18 months, I'll track every major insider sale, every signal that the crash is approaching, every warning sign as it happens. You'll see the billionaire exodus continue in real time, and you'll know when the crash is imminent. This is not financial advice. This is pattern recognition. The pattern from 2007 is repeating. Insiders sell at the top. The market crashes 12 to 18 months later. Insiders buy at the bottom and get richer. The pattern is clear. The billionaire exodus has begun. The crash is coming. Position yourself accordingly.